Now, for more on the market reaction to the debt crisis in Europe and in the US, we're joined by the chief market strategist from Central Markets. He's Richard Perry. Richard, thank you so much for joining us on the show. There is so much concern. Actually, there's so much risk aversion out there. This is why we see safe havens, the Swissy, Swiss franc and gold going up. Is this going to continue until we have a resolution?
Well, I believe so. I think the traditional risk aversion plays being the dollar, US Treasuries and the gold. If you look at them, the dollar remains under selling pressure, and I think the uncertainty over the fiat currency, I think, means that the gold price will continue to push higher.
But this is uncertainty over the fact that can they really now reach an agreement by August the 2nd? And are people more concerned that they're going to lose their AAA credit rating rather than actually raising the debt ceiling?
Well, I think obviously the risk is that the AAA credit rating gets downgraded by the rating agencies. But I think before the August the 2nd deadline, I think that Congress will actually come to an agreement. I believe that. I think it's in everybody's interest to do that, and I think for that, I think in terms of the gold price especially, we've seen that coming down today, and I think that the 1625 limit that we saw today,
record,
a big high. I know.
Yeah.
I think that gold price is looking quite overbought now, and if you look at the technicals again, there's a bearish divergence on the momentum indicator, which suggests perhaps there will be some downside to come. The upside looks to be waning now, I think, and that may now happen.
Richard, talk to me. I mean, an investor comes to you today. What's your piece of advice? Because if gold is being overbought, then we may see an asset bubble in there, and yet we really don't know what is going to happen on the markets if we wake up on August the 3rd, or as soon as there's a downgrade, if there's a downgrade. So should people just stay away from the markets until the situation becomes more clear?
Well, it's an interesting question. I was speaking to a trader at my company today, and we were talking about the potential pairs trade of banks and miners. The banks have been under incredible pressure recently. Obviously, with the uncertainty over the US debt ceiling, banks have been sold off significantly this week. But on the back of that, you've seen the mining shares going higher. And I think that there is a bit of a trade-off going on there. I think obviously that's actually decoupling from the normal risk aversion trade. Sorry, go on.
But no, would you be buying banks? Because I mean, you know, if they've been sold off, why not buy some of the banks? And yet it looks risky.
So it is a risky trade, but I think if Congress does actually come through with a resolution, I think the banks could be a very good bounce-back trade. And you saw an incredible rally last week in the banks, and I think that could be seen again.
But if we have some kind of disaster in the United States, again, either we don't have the debt ceiling raised, or again we lose that AAA credit rating, are we going to see a huge sell-off? Are we going to see 10% wiped off to the markets in a couple of hours?
Well, it depends on how much the market is actually factoring it in now. Obviously, first half of this week, the market has been in sell-off mode, not sharp sell-off mode. Obviously, there is still the possibility that Congress will come to a resolution. I think that the market is now factoring in. Today, I think when I left, it was around about 80 points lower. So it is now beginning to accelerate a little bit downwards, and perhaps when there is a bit of clarity at the end of August the 2nd, when the market can actually know what's going on. Obviously, uncertainty is the bane of the market. When it can actually figure out what to do next, I think the market will then start to actually find a bit of support.
So you would advise prudence, just tread cautiously, I guess, until August 2nd.
And that's why the gold price is looking so strong at the moment. Obviously, that is the key.
Too strong.
Well, that is the key risk aversion trade, isn't it? The gold at the moment. So,
Richard, thank you so much for coming on the show today.